Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into SEC filings so you don't have to. Today we're looking at Dentsply Sirona, the world's largest manufacturer of dental products, and let me tell you, this report has a few surprises, a few things that might make your dentist a little nervous. Let's get into it. We're going to talk about a massive loss, some big changes in strategy, a few legal issues, and how they see the future of, well, your teeth. Buckle up. Dentsply Sirona, they're the big name in dental equipment and technology. They've been around for over a century, always innovating, from the first electric drill to today's fancy digital scanners. They sell their stuff globally, all over the world, and they are traded on the Nasdaq under the symbol XREY. Right off the bat, they start with a big disclaimer about forward-looking statements. Basically, anything in this report that isn't a hard fact is just their best guess and could be totally wrong, so keep that in mind. They say their mission is to transform oral health and continence care with innovative products, solutions, and services through an engaged workforce. Continence care means things like catheters. To do that, they're focusing on keeping customers happy, creating new technologies, acting with integrity, and using their size to their advantage. Dentsply Sirona breaks down their business into four main parts. Connected technology solutions. This includes stuff like imaging equipment and CAD/CAM systems, things they called value-added endodontic, restorative, and preventive products for treating patients. Next is orthodontic and implant solutions, which is all about implants and clear aligners, like Invisalign, but they also sell direct-to-consumer aligners too. Finally, they have well-spec'd healthcare, which is completely separate from the dental stuff and focuses on continence care. For the year, it looks like essential dental solutions accounted for about 38%, connected technology solutions came in at 28%, orthodontic and implant solutions was around 26%, and well-spec'd healthcare made up the remaining 8%. The company believes that the dental industry will grow for a few reasons: rising populations and demographics, people keep their real teeth longer, more demand for cosmetic dentistry. Bigger incomes in emerging markets mean dental services are more of a priority, single dental visits versus historical multi-visit requirements, and rising emphasis on early preventive care. The need for urology and enterology products will grow due to the increase in chronic diseases and expanding medical coverage that supports the use of continence care products. They're constantly working on new stuff. In 2024, they released PrimeScan 2, which enables dental professionals additional mobility and a new version of DS Core. They're also working on implants and restorative materials. They spend about 4% of their sales on R&D. The company also invests in training for dental professionals, with academies and education centers in countries worldwide that offer hand-on teaching, lectures, and webinars. Dentsply Sirona distributes their dental consumables and technology mainly through third-party distributors, but some products like implants are sold directly to dental professionals. Two major distributors, Patterson and Henry Schein, account for a big chunk of sales. Here's where things get interesting. The Chinese government has been pushing for lower prices on medical devices. This has led to increased volumes of products being sold, but also reduced margins for Dentsply Sirona. So basically, they're selling more, but making less per sale. Moving on to the risks section, and it's a long list. Some of the major highlights are cyber attacks, which are a constant threat to the company's operations and data, evolving privacy laws which could impact how they use and share information. Innovating to meet customer demand, there is no assurance that capital allocated to R&D will yield expected benefits. And damage to their reputation, they need to ensure safety standards are met to protect their brand. Business operations could be disrupted by things like natural disasters, worker strikes, or even just a good old-fashioned war. This could impact their suppliers and their ability to get products to customers. They also rely on a limited number of suppliers for some products, and that carries its own risks. There was a major hint that their relationship with Patterson Companies, one of the largest distributors, might be ending. The company delivered a one-year notice of non-renewal to Patterson in connection with its non-exclusive distribution agreements for the distribution of dental equipment in the United States and Canada. They've had some issues with acquisitions not panning out as expected, leading to write-downs of goodwill and intangible assets. This is basically saying that they overpaid for some companies. In the quarter ended September 30, 2024, the company recorded pre-tax goodwill impairment charges as of September 30, 2024 of $145 million for the orthodontic aligner solutions reporting unit and $359 million for the Implant and Prosthetic Solutions reporting unit. Dentsply Sirona is also subject to the risk of legal actions, including litigation, product liability claims, and other regulatory or compliance matters. On a down note, they voluntarily stopped selling their direct-to-consumer bite aligner system and then announced they would no longer offer these aligners to new patients. That resulted in charges and lower revenue. The sales of bite aligner systems and impression kits represented approximately 3% of their annual revenue. This is not a good look for the company. The company is also still dealing with the fallout from a previous internal investigation into financial reporting. This has led to lawsuits and regulatory scrutiny from the SEC. Alright, let's talk financials, some numbers. For 2024, net sales decreased 4.3% compared to last year. The net loss was $910 million compared to a loss of $132 million the year before. So, a big increase in the loss. Cash from operations improved, though, to $461 million. Also, don't forget to take the IRS criminal investigation of a series of intercompany loans with the German tax authorities into account. And finally, they talk about cybersecurity and how they're working to protect their systems and data. So what's our take on all this? Well, Dentsply Sirona is definitely facing some headwinds. The bite situation is a clear setback. It looks like Dentsply had to cease the sale and marketing of their direct-to-consumer bite aligner systems following some regulatory action. However, they still have very strong positions across dental consumables and technology solutions with some growth to show, along with that volume-based program in China. Thanks for watching. I hope you found this video helpful. If you did, please subscribe, hit the like button, and leave a comment. Until next time, stay informed.